Hey guys, it is Friday the 5th, and we are more or less through earnings season. It's kind of exciting to be through it, but wow, there was just so much that happened. And it's so crazy because so many of the stocks traded the exact opposite. This happens every earnings season, and yet it's still like a shocker to me somehow. So each one. But let's go ahead and take a look at the indices and how they're doing. Past performance is not indicative of future returns. We can see on the indices, they started out so red this morning because of the way people were reading the labor numbers. And that also is just giving you a sense for how crazy this market is. I'm going to go through that in just a sec. But yeah, we've got energy finally trading back up to the 90s because the fact is it's really supply constraint, guys. It is not demand destruction. Like that is what the labor number told you. I mean, I just don't know how many times or how many different ways that it can be said, but this is whatever is going on right now in the way of confusion in the marketplace. Or I wouldn't say confusion, it's disagreement. Either I'm right or I'm wrong and everybody else is right and I'm just the biggest dummy. I don't have a problem with that. I've been a dummy before. It happens. But I do want to show you today, this market is more or less recovering up all of the nonsense that came out in energy, which literally came out right on top of these guys reporting these insane quarters. I mean, the only other company, I say it again, that reported a more insane quarter than the energy companies is actually Albemarle, which does lithium. So it's like two sides of the coin. Albemarle does lithium. It got clobbered, even though it should not have. It's more or less where it was trading before entering into earnings, and it should not be because its earnings are up like several 100%. It's like actually kind of ridiculous. And the reason that I think people are giving it this massive discount, which makes absolutely no sense at this point, is because they do have a lot of lithium facilities in China. But the fact is, they're going to be fine. I don't know another way to say it. We have a shortage of all of this stuff. And now that they're moving on to like a market price, there may be little blips here and there, but all in all, it's still like very, very bullish for lithium as long as the energy price remains as it is. Anyways, this is what we're seeing. Big cap tech is giving back a little bit after a fairly strong week. I don't have a strong opinion one way or the other. Additionally, with the jobs number that came out today, they were expecting the number. It came in like several 100,000 more than what was expected, or 100,000 more than expected, something crazy. And that set everybody into a tizzy and concern. I don't even understand the logic of why. When I was reading through, it was like, oh gosh, this was just unexpected. But this actually means more people are getting employed, which tells you that even with the rate increase, even with inflation, even with corporate America is actually pretty strong. And whether they're strong because they're earning or growing, or whether they're strong because there's a lot of work to do, it almost doesn't matter in some ways. Next week, we've got CPI coming out. CPI will probably be the biggest thing that comes out. And then we do have the producer price index. I should actually highlight that as well. That comes out on Thursday. This market is out of earnings season. Though. This is all I have for earnings. So you still have Disney and Fox coming out. So it's media day on Wednesday. And then you've got a bunch of stuff that's coming out on Tuesday. Cisco, some of the retailers will start again. And then the last energy company is ONEOK, which is Pipeline. I'm expecting this to be a fairly chilled out week. Applied Materials could be the one. I think Applied Materials will do fine, but my goodness, was it a mixed semiconductor season? And that brings me to the companies that I just want to highlight today. AMD actually had legit, crazy, ridiculous good quarter. The revenue and they're just like literally passing through every cent, and people are just like paying it. They don't even care because they need it for whatever growth strategies that they have, particularly in data. And you can see the net revenues up 83%, operating income up 131%, which means they literally took every dollar and they made more dollars with it. They came in and people just paid it because they want specifically the chips that are coming out of here. Now, it's important to note that even though client and gaming were up, operating income was a bit weak on gaming. Interesting. But I think more important to that point is that they continuously said over and over again that they're anticipating PC revenue to be down, higher than expected. Like everybody's expecting it to be down a bit, but they were like, nah, PC's not doing great for us. And I think that's a bit ubiquitous. Like I've had kind of a mixed, but AMD is a very particular player within this space. So that's the one area of weakness. We still have Best Buy reports a bit on the later side. CDW's already reported, so I kind of need to go through what they've said. But that's just something to note as well. And then EOG reported today, and I just want to reiterate, all that's going to happen is these guys are going to lower their cost of doing things. And they've been doing that over and over again this entire time. Oddly enough, I like the way that this is broken out. They do it by barrels of energy, and it's like kind of a modified pricing that they do between nat gas, oil, and the whole mix of whatever they're doing to give you kind of a comparable number. And you can kind of see, this is their operating cost per BOE. And you can see from 2014 to now, it's gone down. Last year was a little bit of a blip, but the total operating cost per BOE has gone down significantly in a straight line. It's $28 versus, I think before I was saying something like 33, 38, and 38 was this old number. It's just not that number anymore. And, their break-even cost, I think on oil right now is like 40 or something. They were just talking about that on the call, 44, something like that, 40, 44. That's just really low. I mean, we are the low cost producer of energy. That is a huge, huge benefit. Icon Enterprises, which we've been very bullish on, came out. They had a great quarter, but there were some mixed, weird results in there that just had to do some charges that they took. Additionally, they talked a lot about the fact that because they have that business that does do some refining, they're going to have to push through those costs to Europe. Europe, as I mentioned the other day, in some cases is seeing energy costs up 100%. In other cases, it's even higher than that if we compare it to certain months in 2021. This is just really, really crazy. And yet more than one company has said they haven't seen massive slowdown or massive impact to Europe. So it's a little bit of a weird mixed bag that we're getting. I continue to like shorting Europe. With all due respect, I do it through Germany because I think Germany probably really is not set up appropriately for whatever it is that's going to go on here in the subsequent months, especially as we move into the winter months. And you have to basically figure out, do they have enough stored energy reserves or not? I'm going to say it's probably not, but the market keeps trading like they might actually have a shot. We shall see. And then, we shall see as well what's happening on the grain front. So I continue to be buying food related, the grains. I just buy them through the ETFs once again. I'll do a little bit more on that next week since we're moving out of earnings season. And with that, let me stop sharing my screen. Any questions? It's a short one today, huh, Dave?
No, it was excellent. Thank you, May. It seems like oil. It's unbelievable it got this cheap.
Yeah, this is a real boon to pretty much anyone that just needs to hedge out. So I think if anything, the inflation number could be really interesting because it could actually start to represent that massive decline that we have. And so we could see energy and nat gas looking okay. The other guys that really benefit because they do hedge out pretty aggressively would be something like Walmart, Costco, strangely enough. And then Fleet, which is this company that did really, really well this quarter. They do prepaid cards, including prepaid gas cards. So, you have a car, I know. So, but like those of us that are more like in the city and do Zip car and things like that, we're familiar with it because whenever you do those types of rental cars, there's a gas card inside. And that's how Zip car does it. If you work for a big company where driving is a huge component of what you do, then you would have a gas card to fill up your tank with, and that's all prepaid, hedged out stuff. So my suspicion is in the next quarter, those companies are just going to do great because they're going to be hedging out now farther in the curve, probably in the 80s, 70s, which is such a boon, and then UPS as well.
By hedging, you mean buying crude oil futures or options?
Yeah. Okay. Yeah. Doing something in the options market to lock in a certain oil price to allow them to do their business. If you think about it, like some companies have raised pricing on freight and things of that nature, and they've got to pass that through. It was really interesting to see how much more that market, does what it does. Like if it were me and I had like some macro nerd, I would just triple check, but likely hedge with, I would have been hedging yesterday. You know what I'm saying? Because that was ridiculous. Every single company came out and told you that things are bad as far as like no matter what they're increasing in the way of production, the market is just like eating it up very fast. And then coal comes out and is like, oh, by the way, the utilities companies are now buying coal because they're worried about the price of oil being crazy, which is what that represents. I don't know if that was clear to other people when I said it yesterday, but if you're a utility company, you would have enjoyed the ESG benefit of nat gas. But right now you're probably storing coal just because you're worried that during either the winter months, you won't be able to get it, or during this heat wave that we've got, you're going to need coal as a backup sort of thing, as a backup fuel source for trying to keep the mix a certain way.
Well, Saudi Arabia increased their production 100,000 barrels.
Yeah, barely. It's like a joke, right? Like that's nothing. He's like, it's like so nothing.
Yeah.
Like, thank you very much. Maybe I don't know, Malta could use that or something. I don't know. Like, it's like it's not very helpful. It's
Cool.
unfortunate.
Okay, Sensionics.
Sensionics, yeah, they're going to
Okay.
report next week, so we'll watch and see what it is. I I lightened up on some of my options, but then I have some that I know, like if they go to zero. So I had some so I had some at 2, and then I did get some at 215. If they go to 0, it's fine because the rest of my position will be just fine regardless. But I was looking at this becomes from here until earnings, it becomes like like this is a good one for Richard. So I hope he's looking at it, having fun. Like the chartists really are gonna, between now and then, there's really nothing. And then I do think that after this earnings, what we'll learn is going to be very helpful because we'll learn the degree to which they sold product. And then, they're not classically profitable, if you'll, is probably the best way to say it, because they do tend to have like some contracts that pay them out in a very funky way below the line. But on an operating basis, operating income is negative for this company. So we'll see like what progress they made on that, because they sure did spend a lot on marketing and the such. So
There's a
I don't
pretty big,
know.
there's a pretty big short interest in it too.
Yeah, there was a shortage of yeah. So if they fix the supply chain, if they're getting things going in the right direction, then yeah, probably the stock will move. And then it's really about what will it do in subsequent quarters, to continue that momentum. Like if they've solved the problem.
I mean, that's a game changer
It is a game changer. It's true. It is absolutely a game changer. But we'll see. We'll see, because it's a game changer, but it isn't cheap right this minute. I will say this.
well, $2.03 is
I
pretty
know
cheap.
I'm such a nerd when it comes to like, oh, what is it trading on a multiple basis? What does it imply from a multiple perspective that they'd have to actually accomplish? They would have a Herculean task ahead of them, but if this company actually demonstrates that it can be profitable when it sells product, then I think that they've actually got a really fantastic business going forward. So it'll be interesting to see.
Yeah.
And then just realize that from a momentum perspective, there are people that own this at $3 when it did it, because it was a meme. I mean, it would technically be put in the category of the meme stuff that happened
I
last
was
year.
gonna ask you, when it went up last time, was it just a squeeze? What was it?
I
What
still
caused
don't know. It just ended up being a meme of some sort. Like people just ran into it, and then it like was pushed so hard on the Reddit boards. So I don't know that that's necessarily a squeeze so much as just like people were like, I don't even know. These meme stocks are so strange. But I don't think
Well,
people are shorting it right now at these levels.
it's
And
a
it's
squeeze if
likely,
the shortage, if the short interest is really big, it's a squeeze.
yeah, I just don't see people shorting it. I don't know how you would. Like, how could you
Well,
easily?
you saw, I sent you a short, it's in the news. The
Oh,
short,
was the shortage just really high right now?
yeah, it's like 36%.
Oh, okay. I mean, how much does it trade though? What's that as a percentage of the daily trading volume?
You mean what percentage is short?
Yeah, because the
Uh,
trading volume on some of these memes is actually quite high. So it ends up just being like not quite as a, let's see, the average daily trading volume on this is, oh, wow, it's gone up aggressively. That's the thing with these, when they're so low, like the volume today is 12 million shares. The average volume is 4 million shares, but this thing like whips around. My stat is only like a 30-day stat or something like that. So the
Yeah,
yeah,
volume's
4
good.
million shares high.
Okay.
Yeah, you're right then. It absolutely could be that, that it's just a short squeeze.
No, it's much more now
Yeah,
because of the news.
yeah. Because of the Anthem news. Yeah.
Right.
I don't
Okay.
know. Short people, they're crazy. They really are a special breed. Anyway, cool. We'll talk next week. Everyone have a great weekend. Bye.